Most people believe that they can learn conviction. That's why they watch podcasts, that's why they watch interviews, that's why they read books, because they want to try and learn conviction. The reality is, in anything in life, your conviction is earned. It's never learned, it's earned. Michael Saylor is the only one out of every Treasury company that has earned conviction. It's the reality of the situation. And in this cycle, all of these guys that set up Treasury companies borrowed and tried to learn conviction from Michael Saylor, and now they're having to earn it. And we'll see who makes it. That's the market. That's the capitalist market. Do you know how many private bankers I've spoken to that understand Bitcoin inside and out better than Bitcoiners that are, talking about it on Twitter and literally look me in the face and say, this is the perfect private banking asset. And so the only way people in the masses are going to get Bitcoin exposure is because it's going to be part of some kind of portfolio that's just put together and they won't even know it's in there, right?
Hey everybody, Tyler here with the Bitcoin Treasuries podcast, and today I'm talking with British HODL, who I'm sure needs no introduction to anybody in our audience. Welcome to the podcast, British HODL.
Thank you very much, sir. Thanks for having me.
Hey man, so you got it. So when I messaged you to come on the show, I told you that I needed somebody to get me amped up, to get me bulled up, and so what are the reasons I should be calling you Bullish HODL right now with Bitcoin's price under 70K?
It's very surprising to me that people in Bitcoin have turned out to be so entirely fickle with their conviction at this point in this cycle. Because we spent the entirety of 2025 fixing every narrative that was holding us back, right? Everything got fixed. Wall Street, Larry Fink, Jamie Dimon, Goldman Sachs, everyone, the President of the United States, the Treasury Secretary, the Commerce Secretary, the head of the FBI. Everyone is bullish on Bitcoin besides Bitcoiners. Make that make any sense. So what's happened here is the political narrative is stronger than ever. The institutional narrative, the UAE just announced that they doubled their holding in IBIT, right? In this dip, literally that came out today. The institutional narrative is stronger than ever. And yet the retail narrative is in the toilet. So why is that? What is going on? I don't know what's going on, because what I suspect is going on is these people borrowed their conviction and now they're wondering what the hell happened, because their 4-year cycle dreams of driving their Lamborghinis in Q4 didn't turn out. But that's not how the real world works. You don't get everything you want the very second you want it. So these crybabies need to relax. Like we've got an environment right now where the Federal Reserve is about to go through a major change this year. Rates are coming down, albeit slower than I and the President of the United States wants them to come down, but they're coming down. We've got a new Fed chair, so we've got a narrative shift coming in. We've got the Federal Reserve having announced the SLR ratio changes. So that's really good for banks and the ability to lend out capital. We've got this promise from the Treasury Secretary that we are about to get a handshake between Main Street and Wall Street. And what that basically means is we're about to create so much fiscal stimulus, and then we're about to create so much monetary stimulus that the banks and Main Street are both going to be cracked up to the max. And why are we going to do that? Because we understand that the only hope in hell that we have as a Republican Party for winning the midterm election as the incumbent presidential party is to pump people's bank accounts. That's it. That's the only circumstance in which they win. And they know this. And by the way, the Treasury Secretary is not some moron. He's a guy who broke the Bank of England on behalf of George Soros. He understands how this game works. So when Bitcoiners are sitting here as like the most bearish party in this whole ecosystem of Bitcoin, I wonder what the hell's gone on to Bitcoiners? What's happened?
Yeah, no kidding. Nothing's changed, right? We, like you said, we got everything we wanted over the last couple of years. The institutions are here. You know, whose conviction hasn't wavered is Michael Saylor. He's
100%.
buying like a drunken sailor right now, right? You know, despite price being down, he's buying the dip. But you know, I want to tack on to what you said. You know, about there's so many parties aligned. You tweeted yesterday. I'm just bringing it up here. You said no one wants a 16% CAGR asset that draws down 50 to 80%, and we must rally. And therefore, I think we will, as too many parties are aligned behind Bitcoin now. What did you mean there? And yeah, tell our audience why Bitcoin can't be this, you know, just asset with high volatility that only chugs along at maybe 15% a year.
One of the contributions that I've been trying to make to the Bitcoin community, like behind the scenes, because retail's cooked, right? Like retail's screwed now. Like it is what it is. Those that have it, have it. Those that don't, you know, whatever. No one cares about them anymore, right? Retail's cooked. I tried to spend 5 years telling people that you're going to be screwed at some point, and you're now screwed. And not only are you now screwed, you're now allowing these people to get into your brain and screw with your dopamine receptors and your conviction. So you're like, triple screwed, right? So forget retail. Retail's done. So one thing that I've been trying to do behind the scenes is I've been trying to meet with private bankers here in the UAE and trying to ask them, like, are you offering lending against IBIT? If you're not, why are you not offering lending against IBIT? And one of the things that I've learned is that the institutions are ready. They're just not fully aware. So out of the 3 banks that I had meetings with last week, one of them already does it. Not only do they do it, the relationship manager bragged to me and tried to convince me that I should move my spot Bitcoin into IBIT so they can lend against it, because one of their relationship managers in another branch around the world just did $100 million financing deal at central bank plus 70 basis points on IBIT at a 50% LTV. And so they're trying to tell me, why don't you convert your spot Bitcoin into your IBIT, and then we can lend against it, no problems. The other 2 told me, I don't know why we're not doing that. Let me send an email. So the conversation's starting. And what that tells me is the conversation's growing, right? And so retail right at this point is completely cooked. Michael Saylor's conviction is higher than ever. Institutions continue to buy. IBIT continues to flourish. You know, everyone talks about IBIT and whatever else. IBIT fits my model. I have the only model that's 100% correct in Bitcoin ever. It's the 100% always right, never wrong, never will be wrong model for Bitcoin. It's called the Gonadal Model. And basically, it measures the size of your testicles. And the bigger your testicles are, the more successful you are in Bitcoin. It's as simple as that. The model always works. Now, going to the 16% CAGR, a private banker I spoke to told me, if Bitcoin only generates a 16% CAGR, but continues to have its 50 to 80% drawdown, we can't expose our clients to this in the size that you're talking about. And I was only talking about 10%, right? Because in TradFi, we're talking about 10% of a couple of $100 trillion, right? So it makes sense. Nobody wants to hold on to Bitcoin, giving them a 16% yearly return, when you also get the 50% drawdown. I would rather hold the NASDAQ, where I'm going to get the same return and only deal with a 20 to 30% drawdown every now and then, right? And the rails are already built and everything else. So Bitcoin must rally, and everyone understands this. BlackRock understands this better than anyone, because nobody wants to hold IBIT with a 50% drawdown in size. So if you want more people to hold it in size, the asset has to rally, right, to justify the holding. So that's what's going on here, and that's what I meant by that tweet. We have to rally. And anyone who's sitting around going, we're in a bear market, the top was 126 because of some astrology that I read, and someone one time said, you know, buy 6 months before the halving and sell 18 months afterwards. You have no idea what you are conjuring into reality, because these institutions will never move from 1% to 5%, let alone 10%, if the asset is a 16% CAGR asset with a 50 to 80% drawdown. It's not going to happen.
Yeah, absolutely. Do you think that's been kind of a self-fulfilling prophecy where traders who've been around Bitcoin for a while were kind of just willing the 4-year cycle, into existence this year? Or why do you think we haven't hit the heights that a lot of us expected for Bitcoin's rally, over the past year?
It's a good question. It's absolutely nothing to do with a 4-year cycle. Now, what I will say, and I started talking about this 2 years ago once the IBIT ETF came out. I said, here's what's going to happen. The ETF's going to get approved, and then they're going to use every trick in the market maker's book. And when I say they, I don't mean BlackRock. I mean like they, the institutional world, is going to use every trick in the market maker's book to take your Bitcoin. And I've been warning people about this for 2 years. And now it's happening. Everyone's shitting themselves. While I was saying it, when it wasn't happening, everyone was like, yeah, they're going to take my Bitcoin. I'm never going to let them take my Bitcoin. And now it's actually happening. Now the game is actually happening. They're shitting themselves. So these people are unequipped. These people are mentally unequipped. That's all it is, right? So they're going to lose their Bitcoin. And it's okay. We went through the 2 PsyOps that just happened, by the way, last year. I was not expecting these PsyOps. I was expecting all kinds of PsyOps. I was not expecting a Bitcoin Treasury company PsyOp, and then the best one, the master. I want to know who orchestrated the gold and silver PsyOp to take people's Bitcoin, because that person, I will bow to that person. That person is a genius. What is better, right? Think about it. You got a lot of Bitcoiners who are like gold and silver people, like me. Right? I was a gold and silver person before I came to Bitcoin. And Bitcoin made sense to me through a gold and silver lens, right? It's like unlimited money printing, we want control, you want limited money, etc., etc. And so what do? They go into their bag of tricks and they pull out the one thing to make you doubt your entire thesis. Gold and fucking silver start rallying. Right? And Bitcoin's going nowhere, right? They spend all this time telling you Bitcoin is digital gold. Bitcoin has this gold narrative. Bitcoin is digital gold. Da 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 da. Over and over and over again for 18 months. And then gold and silver rally and Bitcoin does nothing. Because no one's listening to me for 2 years when I was saying Bitcoin's a risk on asset, not a risk off asset. I've been saying that for 2 years now. Bitcoin is a risk on asset, right? And so when people go through this PsyOp, what they go with this, the reality is this, they're like, did I just get it wrong? Is gold and silver the actual winner? The thesis is hard money. Am I wrong about Bitcoin? And so what do? They sell their fucking Bitcoin. You know who didn't sell their Bitcoin? IBIT holders. IBIT had a 94% HODL rate during this pullback. The number
It's
one
crazy.
cohort of people that sold their Bitcoin was the small Bitcoin holding wallets. That's a perfect PsyOp. Like you gotta give applause for that PsyOp. That's a PsyOp. That is a PsyOp. I will never ever forget that. This PsyOp of gold and silver, and then you got all the doom and gloom boomers out. Everyone, all the grandpas are out talking about gold and silver again. You got what I like to call the trans Bitcoiners, right? Because everyone was a Bitcoiner, right? Everyone was a Bitcoiner on X Spaces, and then suddenly gold and silver start rallying, and everyone's got these bags of gold and silver now, right? They're trans Bitcoiners. And so you got all of them out talking about structural supply issues. There's unlimited demand. Samsung needs silver. The COMEX can't deliver, all this other shit. And then guess what happens? Silver dumps 41% in a day. What happened to all your structural issues? I thought there were structural issues. How could the price of silver move like a meme coin? Right? If there was structural issues. The reality is there was no structural issues. These doom and gloom boomers are retards. And I've been trying to warn people for 2 years exactly all the narratives that are going to come down the pan. And basically, this was a masterstroke, complete and utter masterstroke. And then obviously before that, we had the Bitcoin Treasury companies, right? So people have taken a beating. I completely understand. But the only way you deal with this is by mocking them. There is no other way to deal with this because the message has always been the same. Hold on to your fucking Bitcoin. But they got taken. So that is what it is. That's the game.
Yeah. Yeah. The Peter Schiff brain rot, I think, has been really rampant the last few months. And, we've seen gold rally to like a $35 trillion asset, right? And with Bitcoin's price, as we're recording today, I'm looking at my block clock, we're sitting at 68,000. If Bitcoin goes down to 50K, that's a $1 trillion asset. And I think that's just laughable, right? When we hit 100K with IBIT being around, with the political landscape changing, the Trump administration, saying, they're going to support Bitcoin, what we've seen with the Fed. And like you said, they're going to print. They're going to print into this election cycle, win, lose, or draw, right? So I think it's just laughable that we're where we're at with Bitcoin only being $1.2, $1.3 trillion asset at this point in time when we've seen gold rally so hard.
That's the thing that I don't get. It's like you've seen gold and silver rally, and then people tell me Bitcoin can't triple from here. Like, what the fuck are we talking about? You've seen gold and silver rally. I'm not talking about Nvidia here. I'm talking about gold and silver. Silver tripled. Are you telling me Bitcoin can't triple? So my price target is 340,000 plus or minus 15%, somewhere between the last halving and the next halving. I have a suspicion it's going to be this year because by the way, the reason why we didn't rally last year is because we didn't have a liquidity cycle. We didn't have a confidence cycle. In fact, the Trump administration, to line up for this year, has been doing everything that it needed to do to get all of the uncertainty out of the way last year. But what does that do for markets? Markets don't know what the hell to think. Right? Markets are sitting there going, we got one tariff one day, the next tariff the next day, the next war going on the next day, we kidnap a Mexican the next day, a Venezuelan, what are we doing? Nobody understands what's going on here. But all of this has to be set up so that you don't get this volatility in the election year. So they had to front run all of that. This is what I think. And as a result of front running all of that, they created all this uncertainty. And now you can have a year of absolute certainty. Right? So we've just seen the ISM kick up. First print over 50 in 40 months. Extremely bullish. We now should see, by the way, that's not the be-all and end-all indicator, right? The ISM is basically telling you things are not as shit as they are. They're not getting shitter, basically. So now we need to see it continue to swing up. As that business confidence goes up, what we should see is ease of lending happen based on the ESLR changes that they've got. That Raoul Powell has done a wonderful job at covering this in the best possible way that I've seen. You've then got interest rates that have been lowering that are now about to start hitting the real economy because it takes about 8 months for interest rates to actually get into the real economy. And then on top of that, you've got the new Fed chair coming in who basically, this is my version of how the Fed chair was selected. They got 3 guys in the room and said, who wants to lower rates the most? And Kevin Warsh said,
So
me,
true.
and they said, you got the job, right? That's basically my version of how this interview process happened. So you got all of these things lining up for this year. And I think we should, if I'm looking at on March 1st, we should have the next ISM print, and I want to see it higher than 52. And then on April 1st, I want to see it higher than whatever it is then. And if that continues, we should see Bitcoin rally. Now, here's the thinking, right? Because people are like, all these delusional bulls in Bitcoin. Well, let me give you the other side. If we see a new business cycle. And that is represented by the ISM going from 50, breaking 50, which is done already one, peaking out at 60, 65. We see massive liquidity happen because they've got $8 to $10 trillion to refi this year. We see the S&P go through the roof. We see the NASDAQ go through the roof. We see interest rates collapse. We see all of that, and Bitcoin does not make a new all-time high. We've got problems.
Yeah. It's like I've been thinking like a lot, what happens if macro doesn't cooperate? But like you said, with Kevin Warsh being named Fed chair, a lot of people are, oh, he's a little hawkish, but obviously the way Trump has talked for the last I mean, even when he was running for president last time, right? It was like, we got to get rates down. We got to get rates down. He wants real estate refinancing to be cheap. There's no way macro isn't going to cooperate. There's no way the interest rate environment isn't going to cooperate, right?
Yep, 100%. Arthur Hayes has put out a few good articles on this as well. And what he's basically concluded in his research is that there's always contention between the president and the Fed chair, and eventually the president gets what he wants. This is always. So, and this is Trump. We're not just talking about an average president, right? We're talking about the one guy that will stand you next to him at a press conference and berate you until you do what you want, until you do what he wants. So, yeah, we've got a very good environment lining up here. And of course, the main people that are losing their conviction are the Bitcoiners that spent 5 years telling people about why they need to buy Bitcoin, and now they're shitting their pants.
Yeah, yeah. It's right in your Twitter byline that you've been educating people out there, trying to create whole coiners. What do you think? What is the big problem with retail? Is it just they don't actually have the diamond hands that the institutions have?
Yeah, retail, look, there is a part of the brain called the amygdala, and the amygdala is your fear center. And I wrote a tweet about this today. Your fear center is what is used to control you if you are retail. Now, if you're institutional and you think like an institutional investor, you learn to analyze, okay, like this piece of information I just took in, where is it hitting here? And is it something I need to react to? Your threat detection is different. But when you're retail, think about it, I empathize with it, right? When you're retail, you're getting hit on X, you're getting hit on YouTube, you're getting hit on Instagram, you're getting hit on the news, you're getting hit with your friends, you're getting hit with everyone. So it's going to get you. It's just going to get, unless you've got, a mind that basically can just tell everyone to go fuck themselves, which most people don't have, you are going to get affected. And that's why I say, like, you got to be careful. And now it's even worse because social media now is basically a live stream propaganda radio, right? Like with Spaces, it's 24/7, and you're hearing tonality. You're not just reading words. Like, this is a amazing propaganda tool. And so if you can drive different fear tactics into different people, and you see it, right? I put a video out saying these doom and gloom boomers are just going to jump from one narrative to the next. And that's exactly what happened. I literally predicted that they went from gold and silver having a strategic issue, right? And then, actually, right? So it was Treasury companies, MSTR, and all this other shit, and paper Bitcoin, right? And then it went over to Treasury, then it went over to gold and silver having structural issues. And as soon as silver had a 41% dip, what was the next narrative? Epstein, which is the best because it captures everyone emotionally. If you are reading all of that, you're gonna react emotionally, right? Like, it's just naturally inbuilt into us based on what the hell's going on. This is an amazing narrative. This is an amazing narrative for doom and gloom boomers to jump onto, and that's exactly what they're gonna. I have Bitcoiners commenting on my YouTube and X telling me Bitcoin is Epstein coin. Do you understand how retarded these people are? Like, this is the problem with retail.
Yeah, I've got a friend who works at a Bitcoin exchange, and he's not a Bitcoiner. He's kind of just crypto crazy, degenerate gambler. But he just sends me all the time these screenshots of Epstein emails and how it's like Bitcoin's cooked, and I don't even get that narrative. You know what I mean? I've just kind of like tried to ignore it.
The first thing about Bitcoin is it's money for your enemies,
That's right.
right? Like,
Permissionless.
it's permissionless. It's for the people that you don't approve of. And so the fact that, I don't even think Epstein even had any Bitcoin. I think he just donated to the developers. Like, what are we talking about here, right? But this is what retail is getting affected by. And the reality is, look, I'll tell you the other reality of the fact is this. At $100,000 Bitcoin, about 0.4% of the world can get to one Bitcoin. Now, if you've got $10,000, I heard Grant Cardone say this, and I completely agree with him. If you've got $10,000, should you be buying Bitcoin now? I think it's a debate, at least. Should you be buying Bitcoin, or should you be investing in yourself? Do you have a higher chance of higher growth rate potential in setting up a skill and having your own business, or buying Bitcoin? Bitcoin is, it is what it is, like that. But this was always going to be the case. This is why people like me were out here trying to tell people for 5 years now, you are going to be late. It's not a question anymore. Bitcoin is the same asset everywhere in the world. It's not like real estate. Like, I got my start in real estate, right? If I had missed the London real estate boom, I could bring my skills, bring them to Dubai here, like a lot of Brits did, and have made fortunes in the real estate market in Dubai because it's a brand new market. Bitcoin's the same asset in London, Dubai, Shanghai, Singapore, Miami, New York, San Francisco. It's the same asset everywhere with the same supply. It's the only time we've ever seen this, and people don't understand that. So I understand why they're doing what they're doing, but that doesn't take away from the fact that they're a bit retarded.
Yeah. Yeah, makes sense. I want to pivot and talk about treasury companies, but first we got to talk about, the king in the room, Michael Saylor, and strategy, right? The OG treasury company, and what he's been able to do in this market is pretty crazy. I've been tracking his buys, and he's bought 200% of the mine supply just in 2026 as Bitcoin's been dipping. Now I think he hasn't been getting the best prices. He's paying kind of hefty fees on his OTC trades, but when you're buying such a big amount of Bitcoin, I guess I
He told you he was going to buy the top. He told you he was going to buy the top.
yep.
Told you he's going to buy the top.
That's right. And it's just crazy to see it. How do you think about how Saylor kind of pivoted into the preferred equity model, and he's kind of packaging these products for institutions who want Bitcoin exposure but maybe not the volatility? He's got preferred equities that are the best preferred equities in public markets in the world, right? They're paying 10-12%, and they're rock dividends, so you're not getting taxed on the dividends until you sell it. Was that a genius move? And do you think that's kind of unlocked him being able to stack in this bear market?
I mean, of course it was a genius move, but it hasn't quite yet unlocked the stacking capability that it has. Those products are going to be the fundamental bedrock of MSTR's continued accumulation, right? But they haven't scaled yet, right? So that's what he's been doing. He's been working for shareholders like me to go out there and educate banks, educate institutions, educate countries on why that product is a good foundation product for them to build other products on. I guarantee you what you're going to see in the next year, if maybe next 2 years, is you're going to see banks wrap up STRC and offer it to their clients as their own version, right? Like, that's what's going to happen here. But it takes time. All of this takes time. Institutional world moves way slower than people like me and you on YouTube, right? Like, it's just is what it is. Compliance and everything else, understanding, training, and everything. It's just going to take time, and we got to sit here and be patient.
Yeah, I think that's been a big frustrating thing for all Bitcoiners, is that, we want people to move at the speed of a digital world, and the institutions are just so entrenched in their ways. To teach a dog new tricks, it takes some time, right? But
Absolutely. But he's done a fantastic job, by the way. MSTR, Michael Saylor, one of the smartest, fastest thinking people I've ever met in my life. He's done a wonderful job, wonderful execution, especially in the face of everything that, is going on, and the constant bullshit that they keep getting for no reason. Um, Done a wonderful job. And long-term shareholders like me understand what's being built here. We understand that MSTR is a speculative platform being built on top of Bitcoin, right? And the value of the speculative platform is a multiple move in either direction based on what Bitcoin's going on. If it doesn't do that, it's a problem. So if Bitcoin goes up 10%, MSTR has to go up more than 10%. If Bitcoin goes down 10%, it has to go down more than 10%. That's when this platform is valuable. If that doesn't happen, if it only moves 10%, I'd rather hold IBIT. So, institutional players understand that. And I think you're going to see that happen when we start moving to the upside. You're going to see the upside benefit of this.
Totally. And I think you're right about his preferred equities just needing time and seasoning. But I think he's a genius just for being so laser focused on building that out, because there's $8 trillion, like a record right now, sitting in money market funds, right? And like, you're an idiot if you're keeping money in a money market fund and you're, in size and not looking at these types of products.
But remember, it wasn't him. Remember, the thing I give Michael Saylor the most amount of credit for is the ability to pivot. Not many people have that, especially when you have a legacy, you're a billionaire, et cetera, et cetera. It's also the same credit that I give to Larry Fink, right? The ability to pivot aggressively. And that's the one thing that people overlook when it comes to Saylor. And if you think that someone who's willing to pivot this much to succeed is going to end up losing, you're an idiot.
Exactly. Speaking of idiots, there's some Bitcoin Treasury companies that have done extremely poorly. 90% drawdowns, and then another 50% from there, and another 50% from there, etc.
I own some of them.
Me too, man. Guilty, and I still think there's going to be some other winners alongside strategy in this larger Bitcoin Treasury sphere. But how do you think about the whole trend over the last year to move into these Bitcoin treasuries, and why did we get wrecked so hard on those plays?
Okay, so taking into account what I said about MSTR, I separate MSTR from all other treasury companies. That's my mental model. Treasury companies as a whole are a platform on top of Bitcoin. So if you think that Bitcoin is going to go up, it would be beneficial to you to maybe have a long position on MSTR, because it will always go up more than Bitcoin. That's what you're hoping for. And if you think it's going to go down, if you think Bitcoin's going to go down, it's probably better for you to short a Bitcoin derivative like MSTR or any other one of these treasury companies. Now, what happened with these treasury companies, and by the way, I got caught up in the summer hysteria as well. And I actively told people I'm probably exposing like half of 1% to these treasury companies outside of MSTR. And of course, they're all in the shitter. But again, I position size accordingly. That's what an investor is supposed to do based on risk. And so you think about it and you go, these treasury companies have a hard task, because Bitcoin's job is to give you a return, right? To justify its holding. Like its position in your portfolio is justified by a return. Well, MSTR's justification for being in your portfolio is also a return, but it has to be higher than Bitcoin. Otherwise, you just hold the Bitcoin, right? And so far, it's managed to do that over the arc of 5 years. All these treasury companies, this is a risk-adjusted returns-like analysis. Their job is to also give you a return to fight for their position in your portfolio. But they're not trying to just give you a higher return than Bitcoin. Their job is to beat MSTR. Because otherwise, why wouldn't you just hold MSTR, right? That's where they've screwed up. Second place they screwed up is, in order to succeed as a Bitcoin Treasury company, what you need in your stock is volume. You need trading volume. And the reason why you need trading volume is because if your only strategy is ATMing the fucking stock, you need trading volume to ATM into. And so what did they do? They set up X communities and they got degens to start trading the stock. And then they got institutional guys in there to try and milk the degens. And then what happened? The stocks fly to 7x MNAVs, and I'm sitting there going, I don't know if you want to trade one Bitcoin for 0.21 Bitcoin or whatever it is right at the time. Like, I don't know if that's a good idea. And of course, I'm the dickhead because this thing has just skyrocketed, 3,000% or whatever it is. And then, of course, they get screwed, right? They get screwed. The value compresses back towards the Bitcoin and back towards the underlying Bitcoin and whatever else. And then I also think that there's a little bit of vindictiveness from Wall Street going on because of the way that some of these companies were financed. I don't think Wall Street really likes that. And so they're trying to teach them a lesson. And so I think there's a bit of everything going on here. But yeah, I think those are the main reasons why these companies got screwed. Number one, you're just too greedy. Number two, the trading volume wasn't there for the stock. MSTR has trading volumes like Nvidia stock, right? So they can ATM the stock. I don't know if any of these other ones can.
Right, right. Yeah, I think, retail certainly looked at the trade kind of like maybe shitcoins in the past, like as a similar type of trade, how can I
Yeah, it was like, these are the
um
good shit coins because it's on Bitcoin. Like that's
that's right. That's right.
these are the
But when
good
you go
shit.
with when you take that same mentality, right? Some of these companies that were just printing shares, that's what is the difference between an altcoin and a company that does this? Yeah, they're buying Bitcoin, but we're talking about a infinity denominator.
Well, no, that is no, but that is the difference. The difference is that they are buying the Bitcoin, so that the value is being taken out of the market and is being put into the underlying value of the company. That's the point of a treasury company, and from that perspective, they're right. They're right to do so. But as investors in those X communities, they shouldn't have just been looking at price action. They should have been looking, is the volume growing?
Yeah. Yeah. And as an investor, you got to really dig in. And if you're buying a company at 10, 12x MNAV, you got to kind of question your life decisions potentially. But how do you think some of these Bitcoin treasury companies can dig themselves out? There are some that have that, 10,000 plus Bitcoin, not a lot of them, but, I think those guys are going to survive. We've seen some M&A activity, between Semler Scientific and Strive. Do you think we see more of that? Are some of these companies going to get acquired? But how, does it just take Bitcoin's price rallying because it's a derivative?
Yeah, you look, at the end of the day, it's a derivative, right? So, I'm not sitting here trying to justify to anyone that they made a bad trade, right? Like, if you made a bad trade, you made a bad trade. And how you deal with a bad trade is you psychologically turn it into a long-term investment and just shut the fuck up and sit there until it comes back up. The good news is you've got long-term value being accrued with the Bitcoin on the balance sheet. Now, the question that I would have is, if these people start selling that Bitcoin on the balance sheet and start reducing that Bitcoin on the balance sheet, that's now an issue, right? So if you've bought a 7x MNAV company, now you just need to sit and wait. Right, that's just what it is. But if that company starts selling its Bitcoin, now you've got to start thinking about your position. But overall, look, there's use cases for these treasury companies. If you're in a market like Japan, for example, with Metaplanet, and there's a 50% tax on your Bitcoin, right? You cannot buy Bitcoin in a retirement account, and there's no Bitcoin ETFs. You now have legitimate trapped capital that's sitting there. And I would much rather that trapped capital be in Metaplanet than anything else, right? And so would they, because their returns are good on Metaplanet compared to everything else. Now you got to sit with the volatility, but that's part of learning how to be an investor. But the concept is very important, and I think these treasury companies are absolutely useful for the right type of capital. Now, if you think that you're going to sit on X communities and try and degen trade with everyone, that's a whole different reality. At that point, maybe try trading meme coins instead.
Yeah. It is interesting. It did take Saylor time to ramp up. He started from, a position above zero where he did have, a couple $100 million in cash to buy Bitcoin with. But, he went through a bear market and it was rough. The MNAV compressed and I am bullish that some of these treasury companies have really great management and they're going to find their way through it. They're going to find ways to put the Bitcoin to work to, have a cash producing business that they can also keep buying Bitcoin with, even though they're a balance sheet company.
Tyler, the problem is that in anything in life, it's not just Bitcoin, in anything in life, most people believe that they can learn conviction, right? Like, can learn conviction. That's why they watch podcasts. That's why they watch interviews. That's why they read books, because they want to try and learn conviction. The reality is, in anything in life, your conviction is earned. It's never learned. It's earned. Michael Saylor is the only one out of every treasury company that has earned conviction. It's the reality of the situation. And in this cycle, all of these guys that set up treasury companies borrowed and tried to learn conviction from Michael Saylor, and now they're having to earn it. And we'll see who makes it. That's the market. That's the
Yeah,
capitalist market.
well said. You talked about your prediction of 340K Bitcoin price plus or minus 15%. Um, how did you derive that number? And like what is it going to take this year as far as stimulus, refinancing the debt, the Fed kind of monetizing debt, in a backhanded way? Is that what's going to get us there? Is there more to it? Do we need a new narrative in Bitcoin?
Again, there's a lot of thinking that I like to do on this. And I was kind of like organizing my thoughts. And then I read some of Raoul Pal's work. And to me, I mean, there's a little bit of like nuanced stuff that, is mentioned in my thinking and not in his thinking. But he's done a really good job at explaining how the fact that every asset is basically a liquidity cycle. It's nothing to do with the asset itself. Now, I'll tell you when I learned this and when I started developing my understanding of this concept. In 2008 and 2007, that was my first recession. So when people talk about recessions now, it's like a joke to me, because if you were around in 2007 when the credit crunch happened, it literally felt like the world stopped from one day to the next. It felt like money stopped moving. So if anyone tells me we're in a recession right now, or we have been in a recession right now, you're like you don't understand what a recession is. This is a joke. This is a cakewalk. 2007, the world stopped moving for a while, right? And that's when I learned, you know, what I'm about to say. And so what I learned is that even though I was in real estate, the demand for real estate was never the demand for real estate. The demand for the real estate came from the demand for the credit. Because if the demand for real estate was real, then when the credit stopped, the demand for real estate would have been there. But what happened? We had a 50% crash in the property market. And if the demand for the real estate was real, we would not have had that 50% crash. So it took me 12 years to perfect my thinking on that and realize that really the demand for any asset is based on the liquidity. It's the only thing that matters. It's the only thing that matters. And then you look at it and go, okay, so now if you understand that the demand for the asset is the demand for the liquidity, then you look at it and go, okay, which asset's going to respond the best? That is based on narrative, institutional adoption, and scarcity. The most important thing is the scarcity, but the other two are very important. And Bitcoin has the finality of scarcity that nothing else has. And now it has the people behind it who took the real estate market and caused 2007 and 2008 by increasing lending, except the difference is with Bitcoin, you don't have any of those societal issues because no one's jumping out of a fucking building if Bitcoin is $5 million tomorrow, right? So you can actually run the same playbook except actually put your foot on the pedal. Whereas before, you had to put your foot on the pedal, and take it off, let it cool off, put your foot on the pedal, let it cool off. Now you can grow from, you can grow the M2 at 20% a year because you've got Bitcoin, right? Once this whole play comes together. And that was the property market issue was caused by mortgage-backed securities, as I'm sure you're aware. One of the architects of a mortgage-backed security was Larry Fink. So if you don't think that the idea, and it was a good concept, right? We want to securitize a mortgage. So if you don't think that that blueprint is coming to Bitcoin with absolute finality of scarcity, you don't understand how signaling works. And this is the problem with Bitcoiners. Bitcoiners want to hear opinion. Institution never offers opinion. They offer signal. And my job, and the reason why I think my channel is, for this moment in history, has been doing well, is that I'm trying to read through the signal and translate signal into opinion for people. And most people don't know how to read signal because they're never going to come out and say, we're about to pump the living fuck out of this asset, right? What they're going to say is, this is a good private banking asset. Now it's my job to go, what does that mean? And let me translate that and tell people what that means. So that's really like what's going on here, from my perspective.
That's a really interesting analogy to kind of the mortgage-backed security and banks' approach to Bitcoin and repackaging it. I want to dig into that in a second, but thinking back to '08, I was really young in my career at the time, and I don't really know what a recession feels like. And am I crazy to be so bullish on Bitcoin's price, thinking that we can't have a recession like that because the central bankers all learned their tricks in
Well,
2008, right?
I don't know about that, but historically, that type of credit environment happens every 80 years. So for me, it's kind of done, right? Like I'll see one more, right? Depending on how biohacking and longevity research goes. But, outside of that, you see one of those type of research. But yeah, people have learned a lot. Banks are very well funded, got large liquidity pools. We got people that understand how this thing works. You also got people that are now comfortable with the fact that if they got to do yield curve control, they're going to do it. Whereas before, back then they weren't, right? It took them months to approve spending packages. Now, someone farts in the wrong direction, there's a spending package.
That's right. We saw it during COVID, right? Overnight.
Right.
Yeah, totally. What if you were to speculate on how banks are going to package Bitcoin, do you have ideas? You mentioned before that they might package some preferred equities from MSTR and sell it to their clients. We're seeing banks preparing to allow trading on Bitcoin for sure. What other tricks do you think they're going to do to deliver Bitcoin to the masses?
Okay, so you just said a key word there that I was going to go down anyway. So bless you for saying it. You're not going to feel it if you're the masses. And this is a controversial opinion. I think everyone kind of thinks that Bitcoin's going to be packaged for the masses. Do you know how many private bankers I've spoken to that understand Bitcoin inside and out better than Bitcoiners that are, talking about it on Twitter and literally look me in the face and say, this is the perfect private banking asset, not a banking asset, private banking asset. And so the only way people in the masses are going to get Bitcoin exposure is because it's going to be some part of some kind of portfolio that's just put together and they won't even know it's in there, right? Like right now, you ask someone to explain to you, how does your Treasury portfolio work? How does your bond portfolio work? They don't know, right? It's going to be like that. Masses are not going to be convinced to buy Bitcoin. The wealthy are. The elite are. And this is the one mistake I made in my entire mapping out exactly how this was going to unfold when BlackRock filed for the ETF, is that I thought what was going to happen was we got a good ground game in Bitcoin, right? That's taken care of. The next narrative is going to be like the high net worth, which is $500,000 to $30 million, right? Something in that cohort. But what actually happened was that BlackRock came in the game and Larry Fink understood exactly what I was saying better than I did, which is Bitcoin's a monetary network. It's not how many trees can you hug. It's not how many humans can we bring along, how many souls can we put on Noah's Ark or Larry's Ark. It's not about that. It's about how many dollars get on the network. And what did he do? They started focusing immediately on the ultra high net worth, because 99% of the wealth is actually controlled by the 1%. That's why every private banker I speak to now tells me Bitcoin is a great private banking asset, not just a banking asset. So that's my controversial opinion on that. I don't think the masses are going to feel it.
Huh. Interesting. Yeah, that's something I gotta let ruminate. Yeah, I mean, ba- investment banks, investment bankers are always looking to like people like Larry Fink. You know, you've got your commercial banks looking to Jamie Dimon, and is that really the big unlock for them? Is that these guys had to kind of understand the new crypto economy, understand
100%.
Bitcoin? Yeah.
100%. Like BlackRock influences, downstream, not directly controlled by them. I mean, they control $13 trillion directly, and downstream it's like 150 trillion. Like, just think about that. Like, you speak, Uncle Larry speaks, and $150 trillion starts to tremble. And what is he speaking about now? Bitcoin. And you got Bitcoiners that are bearish.
You're making me bullish.
These people are Tyler, they're losers, Tyler. I'm telling you, they're
How did
losers.
that
Like,
happen? How did we get to the point where Bitcoiners were
they're
so
losers.
bullish and winning left and right to the point that sentiment's where it is?
They're losers. They're losers. It just is what it is. You know what I think it is? I think it's that the dollar value got too high. And they're self-programming, their inner thermostat, as Tony Robbins likes to say, is set down here. And the numbers got too big, and so now they're shitting themselves when the price moves less of a percentage than it used to move before. So if Bitcoin goes from, I don't know, 10,000 to 11,000, right? That's much less of an emotional reaction than if Bitcoin goes from 100,000 to 110,000, right? It's the same percentage move, but it's much more visceral to these people. So their reality is coming back down to the level of their training.
Yeah, makes a lot of sense. And institutions, they don't think in, raw numbers. They're thinking in percentages, and they have that lower time preference. So great conversation, HODL. We'll have a sequel down the road, but tell our audience where they can find you online.
You can't find me. Don't bother trying to find me. It's all good. It's cooked now. Like, just give up. Don't even bother trying to find me. If you're retail, look. This is the crazy part about it, right? We spent a year defeating every political and institutional narrative, and people want to ask, should I own Bitcoin? It's no longer the question anymore. You got countries that are sitting around going, how much Bitcoin should we own? Right? That was really what last year was about. Last year was about shifting from should we own Bitcoin to how much we own Bitcoin. Do you understand how monumental of a shift of psychology that is? And we did that. And so now people want to sit around and go like, oh, should I own some Bitcoin? You're a loser. Just don't. Just give up. Because I don't care. Like, this is the thing. I'm not a happy hippie Bitcoiner, as I like to call them. I'm not a happy hippie Bitcoiner. There's going to be winners. There's going to be losers. If you're sitting here going, the President of the United States, the Treasury Secretary, the entire C-suite of the American government, the entire C-suite of Wall Street, the entire C-suite of every government around the world is all focused on Bitcoin, and I need to figure out, should I own some Bitcoin? You're a fucking loser. Accept it. It's okay. We'll take care of you. Just take a seat, and it's over.
Let's leave it there. One thing I have all our guests say is stay orange.
Stay orange.